Thank you very much for joining me on this panel. Actually, you are the experts. I am not an expert in behavioral science, despite what was said before. So I am a finance technologist. So I spent 20 years building systems for banks and working with startups. So if you are interested in the history of fintech, I was there and I survived it. I'm now an academic. Still not behavioral science, but I dare to be here with my guests. So just a few words. Behavioral science is definitely not new, not even in banking or in financial services. We are very good at influencing people's decisions. It's a profession, financial advice. However, from what I see, especially in the world of startups, we have now so much data, so granular data about what people actually do. This is actually golden standard level of data that only 10 years ago was absolutely inconceivable to deal with. And we have the computational power to analyze it and figure out things. So this raises, of course, numerous questions. We can observe people's behavior. We can intervene. We can define interventions. And we have to be also responsible not to take advantage of people's vulnerabilities, which are very, very visible in the data. And also to stop, if possible, fraudulent behaviors or possible situations where companies take advantage of people's vulnerability. So that's all from me. I have no other points to make. I have amazing guests here. And it's honestly rare to have bankers, to have academics, and people from the startup world discussing the same topic. Usually each of them stays in their box, and you know this better than I do. So no, I don't expect this, but it's such an opportunity. I want first each of you to say a few words. Why behavioral science? Why it's important for you? Of course, we have seen the previous presentations which were on this topic. So, but Ben, you.
Sure. So, similar to you, I'm not an academic, and I've spent also around 20-25 years building technology for banks. And what I observed until now is that we are mostly obsessed with how to make people spend more, but also how to hook them up to use services more and more without necessarily thinking what impact it has on their financial well-being, on their overall well-being as a person. And I'm generally quite interested in psychology and behavioral science in particular, and I was always curious to understand what impact we can do as a technologist who build platforms for banks in making banking more ethical without even necessarily asking banks if they want that or not, you know, because we can actually, secretly plant this into the platform, right? Companies who provide technology, we have that possibility. Banks wouldn't refuse that. Of course, that wouldn't be the only thing we provide to banks. But if we just, let's say, lightly introduce such features, such capabilities into the platform, and let banks have it without making any effort, that could make a huge difference. That could make an impact. That's at least how I think. That's what I believe in, right? And that's why I'm interested in hearing colleagues from the academia world and seeing how we can collaborate on that more and achieve more.
I think.
How do you see this? If somebody gives you a piece of technology and it has some...
You know, I'm the old banker because from educational perspective, I'm the lawyer generally, and from work experience, I'm a banker generally. And previously, I worked in traditional banks, and traditional banks still, I think, they don't see this opportunity generally. you're probably receiving a lot of information from traditional banks. Even if you don't have a car, you are receiving information about that. This is the great opportunity. We have insurance for your car generally, but you don't need this generally. And those big banks, like you said, you could transfer for them a lot of new things, and they probably don't know that they receive this. But in fintech area, I represent right now in the fintech sector. We are doing this because how to compete with big banks? Fintechs rather are smaller than big banks, so we don't have such profit and access to capital like big banks. And we are doing this on daily basis. And I'm treating this ethical banking like a customer journey. Let's create better customer journey. And in the end, the customer journey could bring me additional profit because I'm delivering only what client needs generally. I'm not selling products. Big banks are selling products today. They have product approach and they need to sell the product because they develop the product, they spend money, they invest money there. I'm not doing this. I'm selling the service, I'm selling the transparency, and I'm selling really what clients needs generally. And this is, I think, the difference between big banks and fintechs right now. And mainly I'm working with B2B clients, and this is also easiest for me because those clients are rather professionals I don't want to say that consumers are not professionals generally, but those clients are rather smarter and they know exactly how to earn money, and I help them to earn money in proper way generally.
Professor Yang?
Thank you. I think this the technology, the general AI and all this thing, they are like solutions to problems that we find. I mean, in the past, the banks have problems and look for solutions. And now we have solutions. And anybody can use the solution to find the right problem and apply. That is the change of the scene. And that's why banks are under threat by many of the tech companies and so on and so forth. But this technology, like all technology in human life, it can be Dr. Jekyll and Mr. Hyde. We know the good things that the technology can do, but we know that the bad things that the technology may generate. I can think of 3 different categories of major concerns. I mean, when we do research on AI and so on, some work on the technology, some work on the application, some work on the impact, like Fabella and me, we were just presenting research on the impact. So when you think of, so I focus on the impact. One thing that I really worry about is that the technology can create unwarranted excess market volatility because of herding. And I can go on and on. The second thing I worry about is governance problem. Very often, we have black box in and black box out. The title of this one is that we worry about unethical behavior undetected. The third problem is really that the technology can facilitate illicit behavior. Many of your anti-money launderings and all this become more challenging, and crypto, etc., etc. So these are the 3 broad categories of directions that we have to try to check the usage of the technology. But this is not one individual or one bank's problem. We need the society, we need the government, we need the banks to come together. I will say the following. Smaller banks are less able, smaller tech companies are less able to deal with the problems I just talked about. Smaller governments are less able to deal with the problems I just talked about. And AI is something with huge economies of scale. You need the hardware, you need the data, and you need the learning, the talent to manage the AI. So how do you do that? And I think one direction that's really encouraging is federated learning with smart contract, so that all the smaller government and smaller banks can pool the games together to train the foundational model and then develop the application model to safeguard against the ethical problems that we may have to face. That would be my thinking of the whole topic.
So I have a couple of things to say. One is that there's a large number of people that are getting included in the financial system around the world, and many of them have before even you start the behavioral barriers, they have informational barriers. They don't know about a lot of things. And even if you tell them something about it, it's not easy to comprehend and make sense of it and use it in useful ways. So I think that is where I think interventions by platforms and fintechs and other things was going to be important. The other thing is that the behavioral literature has emerged, research has emerged in maybe 40 years or whatever as alternatives to the standard rational models at that point. So we understand a lot of micro data about how people behave, and what you can, and there are any number of articles and implications of that. But what to do about it and how to do and what works and what doesn't work is not very well understood. I don't think it's been conceptualized properly. Some of the problems like lack of attention, setting goals and basic things like that you can solve. There are a whole bunch of other things which I think the knowledge is fragmented. And what I feel also is that the research that's coming out is also fragmented. There's one person doing this, one person doing that with this fintech, another person with that bank, and it's all broken up over here. Some kind of standardization and bringing it together might actually move the field forward in much better ways.
May I ask, when you say standardization, what do you mean in this sense?
I'll tell you. So the stock market, research on that took off when the CRISP database was formed. When standardized financial prices and returns and things like that became, everybody could use them, and research became big at that point. So also with options and other things. In this fintech space, we have little interventions. One person does this here in Australia, another person in China, I did something in India. And everybody has these data sets, these interventions, and there's so many fintech companies coming around and making a lot of interventions. So in some ways, if the data could be standardized, shared, in the open sort of architecture, I think much more progress can be done.
That's what I mean by the federated learning. Sharing data is a very challenging problem. But when you do federated learning, you can have synthesized the data and pool the data with smart contract. You can have a big AI operation that will improve the foundational and improve the foundational model for us to detect the issues that we are aware of today. I think the afternoon has been fascinating. We start with academic and practitioners cooperation. Then we talk about all this learning. To now we talk about ethics. So it is about that we collectively keep our mind on human behavior. And then this machinery is black box in, black box out. How we can collectively learn to safeguard damage against the society. And that is really to me, congratulations, that's the theme today.
But sharing the data, this is the challenge. But I think how I'm using the data, how to use in proper way the data, what I collected. I'm collecting thousands of information on daily basis about human behavior. I exactly know there's always discussion how to track money activity, cash activity. I exactly know where client is spending cash because I have notification. I'm tracking all the information in the mobiles. And I exactly could predict that in this shop client paid by cash, and how to use in proper way the data. This is, I think, the biggest challenge right now. And someone who will win this battle will win the game in the fintech and banking sector generally.
But the thing is if I have all this data, I'm the government, or you, the banker, you have the data. You can detect the anomaly and catch things that you want to catch. That is tech regulation. That's what we do. And then small banks will not be as good as you, okay, because you're more data than other. So think about pooling all the resources together. And that is the thing that we want to do for the society.
I will do this if I will see the profit there.
I would, if I would, project here a movie with what I know from banking and where and how this data look like, it will be a horror movie. Ben, you and I, we have been in fintech for so long, and only 10 years ago it was absolutely inconceivable to do any sort of analysis on the customer data at the level that we can do now. So what you have seen emerging in terms of good practice of nudges and interventions, which are, let's say, transparent and beneficial to the customer. They are not hacking into, I mean, because very often nudging is seen like you are hacking in a thinking process, and you don't know if the customer would do that without that intervention, and you assume that is good, but maybe it's not. What have you seen working? What good practice have you seen?
Yeah, sure. And like you said, we are talking about analyzing data. And when I say ethical banking, to me, that's about what do we do with the results, right? And since we are here with the academia, I try to prepare myself a little bit. And there's this concept of architecture of choice, right? So a lot of banks, when they are designing choices for customers, they are or architecting them implicitly. They are architecting them with the intention to get more revenues, right? So analyzing what's going on and how much more can we actually get from that customer. And what you are saying and what I was referring to before is how do we architect a choice for the behavioral that is maybe unknown to customer, right? To your point. So they potentially don't know that, right? So it's not about selling them what they need. It's about trying to convince them that they potentially don't even need that, right? It's kind of the opposite, completely the opposite objective, right? And so what I've seen so far. So one of the things is budgeting, right? Where budgeting can be just for information purposes. Basically, we just show how much we've spent already on restaurants versus how much we've spent on groceries. But budgeting can also be with the self-imposed self-control, where you say, okay, once I reach the threshold of my budget, please reject the transaction, or please put the remaining or certain percent of what I spent to my long-term savings, or do something else that is actually contributing not to more spend, but to actually more saving and a better...
And for example, if you are spending for the bills, let's stop spending on the bills, because if you transfer this money for loan, you will be free person 1 month earlier, for example. Yeah, this is also good notification, real-time notification for the clients that what are they doing.
Yeah, exactly. So notifications is the easiest thing we can do, but also we can actually introduce actions, controls, the actual automated controls or semi-automated controls. And these are the things, these are in the category of architecture of choice, but with the intention not to get more revenues, but with the intention to provide better prosperity for customers.
And well-being for the customers.
And well-being, exactly, overall well-being, yes.
Prabhala, question. In your presentation earlier, you linked somehow the moment or the event where digital inclusion through that happened in India with the rise of this retail option phenomena. And it was kind of a break in my thinking, because we do have for example, in the UK, where I'm based, the financial inclusion is almost complete. But I don't think people would be able to find even the place to buy retail options. So I think most people don't even know where to go. So it's how this happens in India, how people get to even reach that place where they find themselves with a screen where they can trade options. I mean, there are more barriers, behavioral or not. So if I go now on HSBC app or on Barclays app, I cannot trade options, and I'm. Yeah, but so I'm let's say a prime customer. I cannot do that. So what would be a behavioral intervention that you think would be a good measure to kind of bring things more to normal, to have that type of information that Bernard was mentioning? You give people information and then they can act, or what is missing in your view?
I think, there's a confluence of things that happened on digitization at that time. And along with that, there's a bunch of intermediaries also that came out. Along with that, there are influencers and others that came out. A whole bunch of changes took place simultaneously. And it's very hard to pin down any one thing that was responsible for that. It's just a market that mushroomed by itself as soon as digitalization took place, and it is still growing, and in ways that one cannot anticipate. So I don't. I think right now we are just seeing the emergence of a market, and like Bernard said, it's only 6% of the population still included. So there's a long way to go. So
Sorry, I'm looking. Some questions appeared. A lot of discussions in the West are about how to nudge people to save more. What fintech can do to nudge people to consume more in countries like China, where consumption is low? Is it ethical to make people to spend more?
Is it ethical? Is earning the money is ethical? This is, I think the oldest question.
I mean, the question also is a marketing question for real companies, right? Not necessarily a fintech question.
Yeah. About what's the optimal amount of savings or consumption, I think is an individual issue. But let me get back to the question that we talked earlier. You have the data, and your motive is to make profits. And now you have this machinery that has very powerful short-term predictive power. And there's no way you don't use it, because this is a competitive necessity that you have to activate and use the machinery. But because it acts so fast, sometimes it will generate something that we don't feel like to do, but we actually have done it. That is really the problem. It's like when I'm driving, accidentally I drove too fast, and hit something. It's that kind of thing. And do not forget that all this AI, Gen AI, machine learning thing reflect us collectively. Our value judgment sometimes can be discriminatory, and we don't know it. And from Adam Smith, it says that there is an inner man in us that will not, in his days, he used the word man. I would say inner human beings inside us, who's a neutral spectator that forbid us from doing things that we actually don't want to do. Then the question is really, when things are so fast, we don't give the inner human being inside us to check our behavior. The question is how we can do it. I think the word ethics today that you mentioned is about how we can be ethical, knowing that we use a machine that can go AWOC fast. That really is the issue. And that's what I mean by using the technology to safeguard ourselves against doing something that we would not want to happen. That is the issue. We saw what Fabala presented, and wonderful team, great work. And that is something good that can help the government to do some regulations and so on. But do not forget, already many poor Indians have lost quite a bit. That's the issue.
That's the issue. But in the end, on supervisory level or private equity level, when they ask, where is the money, man? And where is the money in the end? Where is the profit? This is, the reality. We could have this discussion in the end, but I see there also question, there is financial exclusion, etc. But believe me, in real life, in banking life especially, my main goal is to earn and deliver profit to my shareholder generally. Yeah? And when I could have a lot of ethical banking products, etc. But in the end, my supervisory board asking only one question. This is my reality, daily basis.
I would say, as a board member, for your company, they probably will ask you to say, what's your contribution, what do you do, and so on. At the same time, what we are talking about is like, it is healthy to keep something in our mind. That's all that we are talking about, not to regulate against what you do, but ask you to just take a step back and think about, okay, is this okay or not? We had the financial crisis in 2008. We wish that we took a step back and, don't move that fast.
Hope that we learn, but we'll see.
I'm not sure when we started, because it was a bit...
It's as long as we complete the questions, it should be good.
Okay. There are a few more questions there, but we can deal with them.
We'll do one more question.
Yeah, so I think the Gustavo's questions was dealt with by
See
Jakob.
that the question probably is
Yeah.
only bank criteria.
Yeah.
We are sharing the data
Yeah.
anonymously, of course, and we are ready for such cooperation. We are doing this because we also on the acquiring bank means that in acquiring I see all the activity, all merchants activity, all clients activity. I exactly know who is buying what, where, what kind of type of payments and using. And I have this data, and we are sharing also with other companies and academics if needed, but on anonymous level generally and for free.
I'm feeling that there's a role for regulatory standards, and my question is whether they're adapting and understand this thing fast enough as the business is moving. So that I think is the guardrail. You make your profits, but these are the guardrails within which you work. And if those are well defined and they are properly motivated, then I think there's room. That's where the intervention comes.
I agree. I fully agree. And the last question is the term financial inclusion marketing slogan? From my point of view, no. It has many aspects, if you want. For sure, financial inclusion doesn't mean that people have a bank account. In the UK, we have almost the other opposite problem. It's not that people go and buy options, is that they don't use their account anymore. So the fact that people have accounts doesn't mean much.
That's exactly the problem with that term, that it's a little bit of a broad label, and it can mean different things to different people in different segments in different parts of the world, right? We should probably be talking a bit more specifically. What problem, like you said, what problem are we solving with that financial inclusion, right? Why this matters at all to people in the first place?
We do have to worry about regulating before we know it. Okay, I am sympathetic to what he has described. I mean, having the profit incentive is not a bad thing. And you don't want to make profit out of the miserable people. You don't either. But regulation will overt regulation, including non-sharing of data, et cetera, not giving the freedom for people to come up with innovation, can do more harm than good. Okay, it's sort of like I remember at the beginning when the car was available, the regulation is that you cannot drive more than 5 miles per hour. That's the imperial system. In KM, I don't know how much you can calculate. And that's over-regulation. You know? So we have to make a judgment. At the end of the day, I cannot help but to think that we really have to be philosophical and try to make the balanced judgment with our heart if you're the regulator for the people.
Thank you very much.
Thank you.
Thank you.
Thank you. One quick question from me. If we can do a quick round robin, and if you can let us know your favorite ethical bank or insurance company. Without mentioning the ones you work for, Jakob.
I won't be original. We are doing great job, let's call it like this, but generally there is a lot of companies, fintech sectors companies, because without proper customer journey, onboarding, flexible, no hidden fees. Let's imagine big banks, everyone knows this, the fees and charges have 25 pages. In fintech, there is a rather approach, Netflix approach, membership approach, that you are paying €10 and you have access for all services. This is a lot of examples on them. I don't want to mention, we have in Lithuania one of the biggest example, that they have really simple offer for the clients. Everyone could understand what is the fees and how this fees is calculated.
Thank you. Professor Young?
I do not know enough to answer the question. I feel that in every institution, there are good people and there are not so good people. And very often, if the leaders have an understanding of human being and have a conscience, I think they will lead the bank in the right way. I really fundamentally think there's no one cut for all answer. And also, if I don't know enough, I cannot answer. Sorry.
No problem.
Well, there are many ways of doing wrong things, and there's probably usually one way of doing right things. So I also have no answer.
Well, since I have nothing to afraid, I can actually share what I think. Yeah, so first of all, I think quickly to the point about profits, right? I think fundamentally, if you establish trust, you are setting up for a long-term relationship with a customer, and that means you're going to have more long-term profits, right? If you are an evil bank and you optimize for a lot of upfront profits, that customer may switch today very easily, and right, and you will lose long-term profits. So it's all about trust. And one bank that I have in mind for that is Bunk from the Netherlands, that I like and use. That is trying to balance that, and they, as a customer, I feel like they put a lot of emphasis on that trust, with the intention, hopefully, to establish a long-term relationship.
Wonderful. Andrew?
You know, I don't have a particular name, but I spent a lot of time lately looking for the, let's say, forgotten communities which are not digital in the UK. And I've done this because I spent many years in the innovation labs in financial services, developing all sorts of things. And at some point I thought, maybe I did some harm somehow. And I went to see these communities and the way they do banking. And I had an awakening, like, from my super digital world. So an ethical financial institution would be one which acknowledges these people which exist. So we can continue doing digital banking and be very innovative and so on. But the reality is that these communities will continue to exist everywhere, in every country, in every culture. They are not necessarily the older people, as we assume. There are many others.
If I may, sorry,
Sure.
have a minute.
Sure.
I really like Ben's answer.
Yeah.
Trust. A good financial institution is the one that generates trust. People with money but no idea trust people with idea but no money. People who don't need the money now trust the people who need the money now. This is what finance is about. It has a very noble goal to create social trust.
Agreed. And just on that note, I do have an example. So when I work with retail banks and when I transform digital solutions, the example I quote is a company called TrueLink Financial. It's an American company, and it's a fintech firm. They offer financial services tailored for vulnerable populations, such as seniors, people with disabilities, and those recovering from addiction. It could be substance abuse or gambling, for that matter. And what they do is that they offer customized debit cards with built-in spending controls designed to prevent fraud and financial abuse, and the elderly, people with cognitive decline, memory loss, they actually can block their spending at particular times of the day, particular merchants, and they have an added carer login as well. So it's called TrueLink Financial. Where I heard about it, when I was studying fintech at Harvard Business School, name drop, they have a case on this dated 2019, which they updated in 2022, and I'd encourage you to look at TrueLink Financial. Thank you all. I appreciate it. I won't.